Spring is truly sprung, but what does that mean for the global markets, especially in a week light on data? Though it didn't quite end the month at an all-time high, the Dow Jones had a stellar March. Opening a fraction short of 31,125, the index closed at 32,981. That's a 1,856-point increase, the kind of rise that might be tough to match in April. For while the Dow and the rest of the US markets spent much of last month dealing with fears over bond yields and rising inflation, it also had the rather significant boost of Joe Biden's COVID-19 stimulus success. The president's infrastructure reveal, labeled the American Jobs Plan, didn't exactly garner the same reaction. The once-in-a-generation $2 trillion scheme is intended to create the strongest, most resilient, innovative economy in the world, and is designed in part to help the states tackle the climate crisis. Yet the big spend couldn't prevent the Dow from drifting lower, suggesting that the index isn't going to be quite as enamored with governmental spending as it was when discussing the stimulus package. The reason behind the milk or toast market reaction to the infrastructure plan may be the same thing that caused a flurry of worry around the American Rescue Plan: bond yields. The US 10-year Treasury yield is lurking at or near a 14-month high and rose oh so slightly in the aftermath of Biden's announcement. The Dow at all then are potentially entering a tricky situation where anything that is read as positive for the US economy has a negative impact on the financial markets due to the aforementioned fear surrounding a surge in inflation and what that will mean for interest rates. This despite reassurances from the Federal Reserve that they aren't exactly chomping at the bit to start hiking rates and turning off the stimulus taps. Lacking the kind of positive central focus it had at points in March means April could see the Dow struggle to defend its recent levels. This especially since, at a certain point, the Dow's record peak nearing levels may start to count against the index, with investors questioning the justification of said highs. It would do good to get it through the week relatively unscathed, so it could then re-up its focus on the latest earnings season from the middle of April onwards. In terms of the week's data, the US posts its final services PMIs and factory order readings on Monday, followed by the JOLTS job opening figure on Tuesday, the latest Fed meeting minutes on Wednesday, the jobless claims on Thursday, and a pair of PPI numbers on Friday. That's not necessarily the kind of data that's really going to grab investors' attentions and move the markets. So something else may end up cropping up as the week goes on. If left to its own devices, the Dow may struggle to keep pushing beyond 33,000. Already, you've seen it hit 33,200, 33,300, and then retreat, investors struggling to justify sending the index beyond those levels. And as mentioned, without anything central to latch onto, like the stimulus package at the start of March, the Dow may struggle to build any sense of momentum, especially since then the one thing that would be left to focus on would be concerns around bond yields and inflation, something that, though the markets have dealt with far better in the last couple of weeks than they did at the end of February and the start of March, is still an issue and does still cause the Dow Jones and the rest of the US markets to dip, especially since tech stocks tend to take a hit when bond yields are on the rise.